Welcome to ValueBot Studios, where AI-powered insights meet real-world investing. We decode earnings, valuations, and growth fast. No fluff, just what matters. Whether you're short on time or deep in the game, this is your edge. Tap subscribe and let's get into it.
Welcome to The Deep Dive, the show where we cut through the noise and get straight to the insights you need to be truly well-informed.
Great to be here.
Today, we're plunging into a story that really had the market buzzing Meta platforms.
Oh, yeah.
After a bit of a dip, their stock didn't just bounce back, it really soared. More than 9, maybe even 12% in after hours trading on July 30th.
Yeah, hitting highs of, $776 after closing around $695. Pretty dramatic move.
Exactly. So our mission today is to unpack what exactly fueled this impressive leap. We want to explore Meta's ambitious strategy, especially around AI, and crucially, understand what these big shifts mean for you, our listener.
Right. And we've got their official Q2 earnings report, analyst takes, valuation metrics, the whole picture.
We do. So let's get right into it. Okay, let's dive straight into those headline numbers from Meta's Q2 2025. Let's do it. Revenue came in at $47.52 billion. That's a 22% year-over-year increase.
Which is huge and way above what analysts were expecting, right? They were thinking closer to $44.8 billion.
Yeah, way above.
Yeah.
And it wasn't just the top line. Earnings per share, EPS, was also really strong at $7.14.
Again, smashing forecasts. Estimates were around, $5.90? So a big beat there, too.
A very big beat. And, the key thing here isn't just one good quarter. This is Meta's 10th consecutive quarter beating profit expectations.
And 12th for revenue, I believe.
Exactly. 12 for revenue. That shows some serious consistency. It's like a predictable machine.
Hey, what's fascinating here, as you say, it wasn't just a small beat. It was really robust, and the market reacted instantly.
You saw that in the after-hours surge for sure.
Absolutely. That jump to over $776 showed real investor confidence. They liked the performance, and they clearly liked the outlook Meta gave.
And how does that stack up against where analysts thought the price should be?
Well, if you look at the closing price, $695.21, the average analyst target was actually higher, around $756.13.
Oh, interesting.
Yeah, suggesting, maybe about an 8.76% return potential, even from that close, according to the average target. And zooming out, the stock's up over 50% in the last year.
50%? Wow.
So there's been significant growth, a lot of enthusiasm building over the past 12 months.
Okay, that's a strong financial picture. But I guess the big question is what's really driving this renewed confidence?
Yeah, what's the story behind the numbers?
It feels like the narrative has really shifted. The engine behind this seems to be Mark Zuckerberg's incredibly aggressive stance on AI.
He's definitely leaning into it hard.
He is. He keeps talking about Meta's pursuit of what he calls personal superintelligence.
Right, defining that as AI that doesn't just match human intelligence, but actually surpasses it. And he thinks it's now in sight.
Which is a bold claim. And the vision he lays out is bringing this superintelligence to everyone, empowering people to be more creative, build communities, connect. It's almost philosophical in scale, isn't it?
It is a huge ambition. But crucially, this isn't just talk, is it? It's backed by, truly eye-popping amounts of capital.
The spending numbers are pretty staggering.
They really are. Meta boosted its capital expenditure outlook for 2025. The range is now $66 billion to $72 billion.
Just pause on that. That's up roughly $30 billion.
$30 billion, yeah. Year over year, just at the midpoint.
And they're signaling more significant spending increases for 2026 as well.
Another year of similar dollar growth, they said. And this money is going into building these multi-gigawatt clusters.
Which are essentially massive AI data centers, right?
Yeah.
Needing huge amounts of power.
Exactly. Think Prometheus, they expect that to be the world's first cluster, using over 1 gigawatt of power coming online next year.
Yeah.
And then Hyperion scaling up towards 5 gigawatts over several years, just immense scale.
That level of investment is just incredible. Now, you can see the bullish case, build the future, dominate AI.
Right. You have to spend big to win big in foundational tech like this. That's the argument. Maintain that competitive edge.
But that spending level must be making some people nervous too. What's the bearish view?
Well, the natural concern is whether these escalating costs could start outpacing revenue growth. Could it squeeze margins, lower free cash flow, basically eating into the profits we just talked about?
So it's a gamble. essentially. A huge one.
It's an almost existential bet on AI infrastructure, yeah. Its success really redefines Meta from just social media to, potentially, an AI infrastructure giant. How that plays out is the key question for investors.
It's a fascinating tension. Okay, so you have this massive investment, this potential drag on near-term financials. How are they balancing that? How is this AI focus already impacting their core business, the family of apps? Facebook, Instagram, WhatsApp.
Yeah, the bread and butter.
Exactly. What are we seeing there?
Well, the user numbers are still growing. Family daily active people, or DAP, basically anyone using one app daily, hit about 3.48 billion in June.
Which is up 6% year over year, solid growth.
Solid growth. And they're making more money per user, too. Average revenue per user, ARPU, that grew around 14% to $13.65.
So more users and more revenue from each user.
Precisely. And that comes from showing more ads. Impressions were up 11% year over year and getting a higher price for each ad, which was up 9%.
That's the sweet spot, isn't it? More volume and higher prices.
It really is a double win.
And how direct is the AI link here? Can they point to specific AI improvements driving this?
They can, actually. Meta explicitly said their new AI recommendation model is driving roughly 5% more ad conversions on Instagram and about 3% more on Facebook.
Okay, so tangible results on the ad side.
Tangible results. Plus, they mentioned a meaningful percent of ad revenue now comes from campaigns using their generative AI features. Apparently, that's particularly helpful for smaller advertisers.
Right, making it easier for them to create effective ads. So if you, the listener, have noticed your Instagram feed feeling maybe a bit more engaging or the ads seeming more relevant,
that's likely the AI at work. They also said AI recommendations led to more time spent, 5% more on Facebook, 6% on Instagram this quarter.
Interesting. And what about Meta AI itself, the assistant?
Yeah, that's now available in over 200 countries. They claim over 1 billion monthly actives, seeing strong usage in WhatsApp for tasks, apparently, and on Facebook for finding content.
And they're starting to monetize more places, too. Threads, WhatsApp.
They are. Rolling out ads in the Threads feed and also in the Updates tab on WhatsApp, that's status and channels. They did say it'll be gradual, and they expect the WhatsApp ad prices to be lower initially.
Got it. So connecting this back to the bigger financial picture then.
The family of apps segment is clearly the powerhouse. I mean, FOA revenue hit $47.1 billion.
Which is just huge.
It's massive. That's up 22% year over year. Almost all of that, $46.6 billion, was ad revenue. And the biggest driver was online commerce advertising.
And geographically, was the growth concentrated?
Actually, it was remarkably balanced. Europe led the way, up 24% year over year. Rest of world was right behind at 23%. Then North America at 21%. Asia Pacific at 18%.
So strong growth pretty much everywhere.
Robust, diversified growth. And crucially, the operating income for FOA was $25 billion. That's a 53% operating margin.
53%. That's incredibly profitable for the core business.
Very healthy indeed.
Okay, so the core business is thriving, clearly benefiting from AI investment. But what about Reality Labs? Meta's big, ambitious bet on the metaverse, how did that fare?
Right, RL. Well, it posted another operating loss, $4.5 billion for Q2.
Still a very big number.
A very big number, yes. But it was actually less than analysts expected, so maybe a slight positive surprise there, depending on your perspective.
And revenue? Revenue
was $370 million. That's up 5% year over year. They said that was driven by increased sales of their AI glasses.
The Ray-Ban Meta glasses.
Those, yes. Apparently demand is outstripping supply, which is a good sign. They also launched new Oakley AI glasses for sports, the HSTNs. But this was partly offset by lower sales of Quest VR headsets.
So a mixed picture on the hardware front. But they mentioned the Quest ecosystem is still growing.
Yeah, they highlighted the launch of the Quest 3S Xbox Edition, saying it saw record interest in cloud gaming on the platform, so there's still activity there.
So this raises that important strategic question again, doesn't it? These ongoing multi-billion-dollar losses in Reality Labs. It's a real point of debate.
It absolutely is. You've got analysts and investors arguing both sides. Some say, look, you have to keep investing aggressively here. This could be the next computing platform. Get it right. And Meta leads the way, creating huge long-term value.
That's the bull case for the metaverse, essentially.
Right. But others look at these numbers, these billions in losses quarter after quarter, and see it as a significant drag on the company's overall financials. They question pouring more capital in without a much clearer path to profitability, or at least signs of a faster turnaround.
So the fact that the loss was smaller than expected and revenue ticked up 5%, does that move the needle much?
It might ease some concerns, maybe suggest things aren't getting worse, but the fundamental debate remains. Is Meta playing the long game here, viewing RL as foundational for the future, even if it takes years? Or do they need to show more tangible progress sooner?
And the fact that AI glasses sales are up while Quest sales are down, could that signal a bit of a shift, maybe focusing on more accessible AI integration first?
That's certainly a possibility. A subtle pivot, perhaps, focusing on where they're seeing immediate traction while still developing the bigger VRR vision. It's definitely something to watch.
A bet on a long game in, but one that still faces a lot of scrutiny.
Okay, looking ahead. What are the financial projections? What headwinds are they flagging?
Well, first, their Q3 revenue guidance was pretty strong. They project between $47.5 billion and $50.5 billion. That's actually above Wall Street estimates.
So they expect the momentum to continue in the near term?
Seems so.
Yeah.
But on the cost side, they expect full year 2025 total expenses to be between $114 and $118 billion. That's a growth rate of 20 to 24% year over year.
Driven largely by that AI infrastructure build-out, presumably.
Primarily, yes. And they specifically warned about meaningful upward pressure on expense growth again in 2026, mainly from infrastructure costs and also employee compensation as they keep hiring technical talent, especially in AI. So costs are definitely expected to keep rising significantly. What about cash flow and their cash position?
Free cash flow for Q2 was solid at $8.55 billion, and they ended the quarter with a very healthy cash balance, about $47 billion in cash, equivalents, and marketable securities.
Okay, so they have the resources to fund these investments.
They do. And despite the heavy spending, their operational efficiency metrics still look strong. Things like return on invested capital, ROIC, that was almost 27%. Their cost of capital, WACC, was around 9.5%, and economic value added, EVA, was over 17%.
Which basically means even with all the spending, they're still generating substantial value from their operations, right?
Exactly. It indicates they're deploying capital effectively, which helps underpin investor confidence despite the rising expense line.
Got it. But it's not just about the internal numbers, is it? What external factors are looming?
Right. There are a few key things. On the plus side, a new U.S. tax law is actually expected to lower their federal cash tax bill for the rest of this year and beyond.
Okay, bit of a tailwind there.
A nice tailwind, yes. But then you have the regulatory side, especially in Europe. That looks like a growing challenge.
The Digital Markets Act, the DMA.
Exactly. The DMA and also issues around their less personalized ads offering in the EU. These could significantly impact European revenue down the road. Meta is appealing the decision, but changes could still be forced on them.
So a definite risk factor to keep an eye on. And headcount. Are they still growing the workforce?
They are, but strategically. Headcount was just under 76,000 at the end of June, up 7% year over year. But the hiring is targeted, focusing on AI and infrastructure priorities.
Okay, a complex picture. Strong core growth, huge AI bets, ongoing Reality Labs losses, and a shifting regulatory scene. How is the market actually valuing Meta amidst all this?
Let's ground it in valuation. If you look at their price-to-earnings ratio for the next 12 months, the NTM-PE, it's sitting at 27.0x.
And how does that compare historically for Meta?
It's above its average over the past year, which was around 24.9x. But it's not quite at the peak of 29.1x seen during that period. So investors are clearly betting on future growth, willing to pay a bit of a premium compared to the recent average.
And other metrics, like enterprise value to EBITDA.
Similar story there. EBITDA for the next 12 months is 14.9x, also above its recent mean of 13.7x. It suggests the market is valuing the whole company, considering debt and cash, relatively highly based on expected operating earnings.
So what are the analysts saying? Are they mostly positive?
Overwhelmingly positive, actually. Out of 68 analysts covering the stock, you have 49 rating a buy and another 10 a strong buy.
Wow, that's almost 60 out of 68 with a positive rating.
Yeah, only one strong sell in the mix. So a very bullish consensus among the professionals.
What does that tell you, our listener, about the market sentiment right now?
Well, it shows strong belief in the growth story, particularly the AI narrative. But it's also important to remember how sensitive the stock has been to news recently.
We saw that with the pre-earnings jitters about AI spending, right?
Exactly. It rallied on positive notes and the AI vision, then sold off a bit on spending concerns, or maybe due to broader tech worries or even legal headlines. It's reactive, and its beta is 1.28.
Meaning it's more volatile than the overall market.
Roughly 28% more volatile, yeah. So while the valuation and sentiment look strong, you should be prepared for potential swings based on news flow. Those strong efficiency metrics we talked about earlier, ROIC, EVA, they really help justify that positive analyst view, showing the company is performing well operationally, even while investing heavily.
Okay, so let's try and wrap this deep dive up. To recap, Meta delivered a really stellar Q2. Performance was propelled by very strong advertising results, which themselves are being boosted by these massive strategic investments in AI.
Especially AI focused on this goal of personal superintelligence.
Right. Meanwhile, Reality Labs is still losing significant money, but the loss narrowed slightly. And there were some positive signs, particularly with the AI glasses and maybe the cloud gaming interest on Quest.
Yeah, a nuanced picture there. Still a drag, but maybe showing some product momentum.
And the company is navigating this complex environment, balancing that aggressive innovation and spending with, an eye on those growing regulatory challenges, particularly out of the EU.
Definitely a balancing act.
So, considering Meta's stated goal, developing personal superintelligence for everyone, and the sheer scale of investment they're pouring into the infrastructure for it, it leaves us with a pretty big shot, doesn't it?
It really does.
How might our daily interactions, maybe our relationships, even how we see ourselves, how might all that evolve when or if truly intelligent AI becomes this pervasive personal assistant in all our lives?
And what are the new ethical questions? The social considerations that arise as that vision gets closer to reality.
Exactly. It's certainly something for you to ponder as we watch Meta's next chapters unfold.
That's it from ValueBot Studios. Smart investing, simplified by AI. If this helped, follow, rate, and share with a fellow investor. The market moves fast. So do we. Subscribe now and stay ahead. Until next time, goodbye.